Tuesday, August 29th, 2023, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at the Eurozone. Yes, the Eurozone are the EU countries that use the euro. There are countries in the European Union who don't use the euro, so that's an important distinction to make. And we're going to look at an indicator that has come up in the Eurozone. And the last time this indicator went negative, it was at the onset of the sovereign debt crisis that began in 2009 in Greece, all the way to 2012. Yes, the Eurozone has actually fallen into deflation. And you might be asking, what are you talking about? We've got inflation. Well, we're going to look at that. Before, though, I like to just make a quick, brief analysis of BRICS expansion. We're going to be seeing BRICS 11 by the 1st of January 2024. And I was thinking, because my background, academic background, I graduated undergraduate degree in international relations with an emphasis in economics. So, and I've also always liked history. And decolonization in modern day means basically when a lot of the African countries gained independence, mainly from Great Britain, from France, Portugal, and maybe Belgium as well. And that happened in the 60s and 70s. Of course, the 13 colonies in North America, that was a much earlier event in terms of decolonization. And those 13 colonies nowadays are 50 states, of course. They've expanded. And sometimes things happen, like decolonization in the 60s and 70s. Yes, you're going to be free now. You're going to be independent. Oh, I forgot also India, of course. That's very important. 1948, India and Pakistan, they gained their independence. But the more I've learned about money and the monetary system, I've realized that this independence that they've had was not really, was kind of superficial, because the Anglo-American Empire still ran, or still running to this day, the monetary system. So as one of the earlier Rothschilds back in the 19th century said, give me control of a nation's or a country's money or currency, and I care not who makes the laws, right? So I think BRICS expansion, and you might think whatever you want of the countries in the BRICS. Yes, they might fail miserably. They might not develop as well as they have so far, but they're trying to basically break the shackles. That's the way I see it. And you might think, and there's a lot of people, of course, out there in denial about the dollar. Not that the dollar isn't a good currency in terms of fiat. The U.S. economy is still the biggest economy, even though it has a lot of problems, a lot of structural problems like debt, overwhelming debt, deficit spending, and other things. You could have said the same thing about pound sterling. Back in the late 19th century, early 1900s, who would have thought that by 1954, sterling would not be the major reserve currency anymore? Yes, 1954, as you can see by this chart here. A lot of people think the dollar became the major reserve currency right after World War II, but it took a few years. As you can see, the dollar only took over from sterling as the world's major reserve currency around 1954. So what I'm saying is, yes, the dollar is not going to go away overnight, but I think the direction is set. And You probably heard of the special relationship between the US and the UK, and I think it's still on, of course. And basically, the British Empire passed the baton on to the dollar. But now the BRICS are challenging that. And I think we're going to see the same thing. It will probably be the renminbi or the yuan. I'm sorry, that's the international currency that will overtake the dollar, or a combination of some other BRICS nations' currencies. And that's the way I see it. So, back to deflation. And I said in the beginning that you might be confused. Well, some of you maybe who have not listened to me before, who are here for the first time, but my long-time viewers and subscribers, they know what deflation is and what inflation is. So let's refer to the Merriam-Webster Pocket Dictionary from the 1970s, which I have here, but I've done a screenshot here of the definition of deflation. Number 2, it says the reduction in the volume of available money or credit resulting in the decline of the general price level. And then inflation, of course, is the opposite. Number 3, an abnormal increase in the volume of money and credit resulting in a substantial and continuing rise in the general price level. So yesterday, we had some data from the Eurozone. And as I said, the Eurozone are the countries in the European Union that use the euro. There are countries like Sweden, Denmark, and others that still have their own currency. They're not part of the Eurozone, but they follow pretty much the same policy. But we had M3, which is money supply, year on year dropped by 0.4%. It's not that much. But if you look here, it's the first time since 2009 that it did that. And if you look closer into that 2009 period here, that was pretty much when the European sovereign debt crisis, which I've covered quite a bit here on this channel a few years ago. And what was the European sovereign debt crisis? Well, it was more like a Southern European sovereign debt crisis. It involved the PIGS, which is an acronym for Portugal, Ireland, Italy, Greece, and Spain. And it happened, of course, just after the 08-09 crisis. It kicked off with Greece. And basically, those countries were indebted up to here. And bond yields in those countries started going through the roof. Their governments hadn't done enough to rein in deficits and rein in the debt. Sounds familiar to what's happening nowadays in the US and UK and even some other non-PIGS countries. And eventually it led to a response from the ECB by Super Mario Draghi, or Mario Draghi, the president of the ECB. He made a speech and said,
"There's another message that I want to tell you today, is that within our mandate, the ECB is ready to do whatever it takes to preserve the euro. And believe me, it will be enough."
We're going to do whatever it takes, which meant print as much money to save these PIGS, P-I-I-G-S. Yeah, and that whatever it takes speech was on July 26, 2012. So the crisis was there for like almost 3 years. And I remember at the time I was still working in the city, especially in 2011. There's a lot of rumors. And I think it was true that the Germans had started printing Deutschmarks because they thought the euro was going to break apart. And that's the other thing I would say. if there is a breakup of the euro, I mean, I always want to have some gold and silver, but for a trade idea, and this is not advice, would be probably to buy German government bonds because they would revert to being in Deutschmarks, even though I think the Bundesbank's balance sheet is not too good. So I probably wouldn't even do that. Maybe short-term bills, German short-term bills would be a way to go long the Deutschmark. But yeah, that's what happened during that period of real deflation. And the problem with confusing and getting people mixed up with definitions is that right now, with CPI, which is not inflation, and the mainstream, even central banking economists, everyone, politicians, they consider inflation. No, it's just a consumer price index. It's a basket of prices. So I wonder if the people at the ECB and the politicians noticed this number yesterday, that we've actually got deflation in the Eurozone, and that could be a huge problem because they're still fighting inflation. So that's why central banking and the whole Keynesian philosophy, the Keynesian paradigm is so, I don't want to say the word, effed up. You get my gist. And yeah, so look out. And am I saying that another crisis is going to start today or tomorrow? No, but it could be pointing to something. And this time it could be a lot worse. Maybe 2009 to 2012, the European sovereign debt crisis was just like an appetizer. And now we're going to get the main meal, and the main meal will be a global sovereign debt crisis. And I haven't really followed too much what's going on in China. They have negative CPI, but their money supply growth is still positive. But the FT reported a few weeks ago that China has fallen into deflation, but they haven't. The Eurozone has fallen into deflation. So there you go. So with that, let's quickly look at where the markets are this morning. We're going to look a little bit at the Japanese yen today. There's some interesting news about the yen. It's around 8:15 a.m. London time. So we'll start with gold, of course. Spot gold is at $19.23. It's up $3. High's been 26. The low has been just below 19.20. Silver's up 7 cents at 24.28. It's up 0.25%. The high's been 24.40 and the low 24.18. Dow futures is up 33. Nasdaq 100 future is up 25, and the S&P future is up just under 6 points. To the currencies, sterling is up 0.1%, just above 126. The euro is unchanged. We're at 108.15. The dollar's down slightly, but still quite elevated versus the yen. It's at 146.42. So I saw a tweet today that the price of gold in yen has gone up to the highest level ever of 10,000 yen per gram. And of course, we've been following a lot the price of gold in yen. And as Tavi Costa said yesterday, and I mentioned him in my video, all the other currencies are going to follow the yen in terms of sinking versus gold. Yeah, so lo and behold, today, all-time high in the price of the ounce of yen. In yen, it's 281,572. So there we are. And if you look back in the last few years, you've had these quadruple, triple tops where you think, well, this is it. The price of gold is going to come back down, and it just keeps going up. And I think even though it's been frustrating for those who think in US dollars, it's going to pay off. And also in silver, it's going to pay off. It's just a matter of being patient, of doing the right thing, because there is no way out, of course, out of this predicament of massive debts that we have. The only way to pay it off is to devalue it through more inflation. And you know not by now, hopefully, what inflation is the exorbitant or the creation of currency and credit out of thin air, not backed by money like gold or silver. And that's going to continue unless, of course, they want to bring everything down in a major deflationary collapse. But even if that were to happen, we saw during the European sovereign debt crisis that gold made an all-time high versus the euro, not in 2011, but in 2012, because you had this deflationary crisis where government bonds were collapsing. So either way, it's the place to be, in my opinion. So let's continue. What's the yuan doing? Well, not much really. The dollar's unchanged at 729.60. Let's check the ruble. The dollar's up 2.4%, trading at 95.37. So yeah, the dollar has crept up in the last week. It got down to around 93. Now it's at 95, but it seems fairly steady, the ruble for now. To the other currencies here, Aussie dollar is up 0.25%, 64.43. The dollar is unchanged versus the loonie at 136.02. And the Kiwi dollar is up 1/3% at 59.28. To the commodities, we got WTI crude down slightly here, just below 80. Brent as well is down about 1/8% at 83.80. Platinum is unchanged, trading around 970. So platinum is starting to pick up. I think recently we dropped just below 900 and is now going back up quite nicely, I would say. High grade copper as well is up 0.5% at 381. And we'll finish off with the bond markets. And bond markets always seem really boring, but they're very important for us to keep an eye on. The 10-year yield, US 10-year yield, is down 2.5 basis points, just below 420. So it looks like for now they've managed to keep it below that 433 level. I guess we're going to have non-farm payroll, probably the jobs data this Friday, or maybe not, maybe the next Friday. Sometimes if it falls very close to the beginning of the month, they change it. Let me just quickly have a look actually at that. I'll let you know right now. Friday. Yeah, no, they're not going to have the non-farm payroll on Friday. It's going to be Friday the 8th. So I think that's the next important data. But we could have data in the meantime that change things for the bond market. Let's check the UK bond market. Right now it's telling me that the 2 years at 533. But I have a feeling that this is going to change and drop because they've got an old 2-year here, and they're probably going to readjust for a new 2-year. So I would say this yield is probably a bit lower, but we'll keep an eye on it. Nevertheless, it's up 6 basis points, which is not a good thing. The 10-year is up 2 basis points, 446. 30-year is still below that 5% level. We're at 467. So with that, I'm going to wish you all a very good day. Take care. Bye.